Dania are with Women's Business Development Center, and we're really excited to partner with IRA today to discuss capital readiness and access to capital for restaurants. We know this is a really important topic for any form of food and beverage business, whether that's a brick and mortar restaurant, whether you have a food truck or a push cart or a bicycle coffee cart. I mean, really, everything's become so innovative, but the bread and butter really is cash flow and capital. So we're going to go through a little bit about who we are as an organization, getting capital ready, cash flow tips, and then capital options. And then we'll have some time for Q&A. But please feel free, as you have questions, go ahead and put them in the Q&A function, and we'll go ahead and get around to those. So WBDC, we actually serve a 9-state region, so kind of from Illinois, Missouri, Kansas up, and we serve 5 major markets, and then even within the Chicagoland area, we have several locations. So you may have heard of us from the Aurora office. We have a Richmond Park office, as well as presence in Little Village. And then, of course, Chicago, right across from the Bean. And so Women's Business Development Center, we were started about 30 years ago to really address and dismantle biases and barriers that prevented folks like women and other underrepresented folks from really accessing entrepreneurship as a tool for generational wealth creation, creating a legacy to leave to their kids, and really just as a vehicle and viable career option. So we do this by delivering programs. This is our team here. Josh Gutstein is our managing director. Isaac Spoke is our director. Pardon me. I am Emma Westfall, Associate Director of Access to Capital, and we have Dania Beal. Dania, do you want to do a little quick extra intro?
Hello, everyone. Thank you for taking time to hear about our capital options. Again, as Emma said, my name is Dania Beal, and I am the Associate Director of Access to Capital, but specifically access to capital with Kiva. So I am your resource and your hub here in the Chicagoland area to help guide you through the application process, answer any particular questions that you may have, and just bring clarity and awareness of Kiva and how Kiva can be very beneficial to you and your business. Thank you, Emma.
Thanks, Dania. And Dania has the special distinction of having been on the certification team. So she has that added expertise of understanding the ins and outs of applying and being successful with the Women Business Enterprise certification, which Women's Business Development Center does do. So if you are interested in that, another plug, Dania is knowledgeable in that area, in addition to our current certification team. So as we get started here, this is a phrase we like to say, right capital at the right time from the right source. This can be pretty intimidating for people because there's all sorts of capital. You have a lot of time, ideally a lot of different times in business where you may require that capital. And then there's so many sources, right? So we're going to break this down today and help you just feel ideally a little bit more confident in this area of capital readiness and access to capital. So love to also start with another quote from, somebody who has some great insight, has lived an interesting life. Eartha Kitt, the singer, has a quote, "I am learning all the time. The tombstone will be my diploma." So let's get in a little bit of a learning mindset with the hour we've set aside today and jump into Capital Readiness 101. So first we start out, right capital, right? What are the types of capital, or where can capital come from? So I've kind of highlighted some of the main buckets. And we'll go through each bucket and describe, what you can expect from each of these and how likely they are for you to be utilizing them, and maybe even in what time period in the business you may want to leverage them or need to leverage them. So I'm going to start with personal savings. Personal savings, as many folks know, most businesses in America today are bootstrapped, meaning personal savings are the foundation, if you will, of building that business, right? That could be a lot of hospitality groups will have 3 or 4 owners, right? And each owner puts in X dollars. So personal savings at the beginning is pretty essential. But oftentimes, if the cash flow management is challenging, people will continue to use their personal savings to keep the business afloat. And when that happens, that signals to me extended use of personal savings signals that there may be a cash flow challenge, and we need to dive into that, right? So it makes sense to me to use your personal savings at first, but we want to ensure that that's not the only source of capital through the whole life of the business, right? Next, I'll do term loans. So term loans, the phrase term means, a specific amount of time. So a term loan is a single amount that you will have, you go to a lender, they say, okay, here's the loan, you get the entire amount dispersed to you, and then you pay it back over that set term, which otherwise known as, 10 months, 12 months, 10 years, whatever that amount of time is, that's the term of the loan. And you repay the principal, which is the amount you initially borrowed, plus interest. Term loans right now, I'll have people come to me, I'm sure, Jania, you get this too, and probably Teresa. I really want, a cheap loan. I run a low cost, low interest business loan. And that's where we're going to get into the 5 C's of capital. But term loans and their interests are going to be very much determined by conditions to a large extent. Term loans also they vary a lot in the amount. So Kiva has a term loan. That's technically a term loan. Those terms are at max 3 years. Some SBA lending loans, maybe 20 or 25 years. Or if you think about a mortgage for a home, that's another type of term loan, and those are usually 30 years. Lines of credit are another form of debt financing. So term loans, lines of credit, factoring are all debt. And debt means you're taking it out and you have to repay. Line of credit is usually available to someone. You might go to a bank and they may approve you for up to a certain amount. Now, the common wisdom is you only want to use X percentage of your available credit, right? So if I have a $10,000 credit line, I may never want to go past $3,000 or $4,000 that I'm using on that credit line at any given point, because usage is one of the factors, when it comes to your credit. So a line of credit, I kind of also put in this bucket business credit cards, charge cards, secured business cards, anything that, a bank or a, credit card company may give you to use for the business, where, again, you're only repaying what you use. There's oftentimes even higher interest on lines of credit or certainly credit cards, than term loans for the most part. Factoring is when you have an invoice and you are essentially You essentially sell that invoice to a factoring company. They pay you 80, 90% maybe of that total invoice amount. And when they finally get paid, they get to keep that 10 or 20%. So the benefit of that is you get paid sooner. However, you get paid a smaller portion of the total amount. This for restaurants, unless you're a supplier, is not necessarily going to be super helpful, but it's good to know about. Revenue-based financing is kind of in or near factoring in my little diagram here. So in revenue-based financing solely means they will lend you, a lender will lend to you based on the amount of sales you do, period. It's unsecured, and there's a lot of variation in the vendors that'll do revenue-based financing. There's a lot happening in that space, especially with alternative lenders, because it's an area of opportunity for lenders to intervene and try to prevent folks who may not have assets or collateral, may not qualify for something more like a term loan. It's definitely a space to watch. And I think for restaurants, especially, it's something to think about, but be very, very cautious around, because factoring or revenue-based financing, you oftentimes lose control, some level of control over your cash flow. So a term loan, you may repay that once a month in all likelihood. A line of credit, you may pay that monthly, as well as a credit card. Factoring or revenue-based financing, you may pay that daily. It may be every sale. It may be weekly. It can really have a detrimental effect on cash flow. So we want to be very, very aware of that. And then grants. Everyone says, right, Dania, when they start their business, so, I want a grant for my new business. I put this in perspective. There is a new business grant available through Illinois Department of Commerce and Economic Opportunity, IDCEO. The new business grant for that is businesses started in 2020, 2021. That was 4 years ago. Those aren't really new anymore, right? So grants are tricky because they oftentimes are geared towards older businesses. However, there are a lot of opportunities out right now and continually out for restaurants, for food-based businesses, whether that's equipment or payroll. There's a variety of options out there. I'm sure IRA has awesome resources. We have some resources as well. One I would plug is the Good Food Fund. There are 3% interest rate loans available. There are grants available. So definitely check that out. The expression of interest form, which isn't really an application, not quite sure what it is, but it's an expression of interest form that is due in 2 days. So if you want to crack at the Good Food Fund, again, Good Food Fund, that's through Allies for Community Business. So definitely check that out. And then finally, equity. So going back to, whether you're running a standalone business or you have formed a hospitality group, I wanted to mention equity again because there's a lot of, maybe not a lot, but there are some very large conglomerates that may, after scaling, be acquired by private equity or venture capital. That does take time. Investors are looking for a very high return. and you also lose a level of control over the business. So equity is something for high growth, good return, great returns. And the sacrifice is you really do relinquish a lot of control. And I think for a lot of restaurateurs, giving up control is probably a little bit tough, because you have your own perspective and unique voice within the business. So this is a chart where you can see, again, because the age of the business is so important when it comes to capital, where each of these falls generally in terms of availability by age of business. So personal savings, like I said, that is definitely something for the beginning part. But if you are using a lot of your personal savings 5-6 years into the business, it's definitely time to take a look at the cash flow. I see there's a hand up. Teresa, should we wait for, I'm happy to, they can't come off mute to ask their question.
Yes.
Teresa, this is Anna. Sorry, I got disconnected.
Oh, okay. Let me put you back in your channel.
All right, sorry.
No problem. Sorry.
All right.
Go
Okay,
ahead.
so
Oh, sorry.
are we all set?
Yep. Go ahead.
Okay.
Thanks.
So what is capital readiness, right? What does that actually mean? So there are things we can do to prepare you personally and within the business to present yourself in the best, most fact-based light to a potential lender or grantor. And there's a lot of work to be done around gaining business and financial acumen necessary to successfully navigate the capital landscape. And there are some tangible effects of being able to navigate this successfully, right? Understanding how a lender views you compared to other restaurant owners that they're seeing. Ultimately, preparing allows you to save time applying, save money in the time it's taking you to do that application, and effort, of course. And also help you protect your credit, right? As a business owner, oftentimes, I was in a session yesterday, asked everyone if they've seen an impact on their personal credit from starting a business, negatively impact. Almost every hand went up. And so we understand that your personal credit is very important to you as an individual, as well as to the business and the options of capital that the business has now and in the future. So we really want to ensure that we're giving you the tools to protect that credit. If you are going shopping, say you go on a shopping spree to find capital, maybe you're a little frantic and you apply 10 places in a week, those could be 10 different inquiries. And inquiries are a technical term, meaning a lender has pulled your credit report. If you have a lot of those in a short period of time, it can negatively impact your credit. So we want to ensure that you're doing everything you need to do to get into a good space before you need the money, right? So that you're most successful in doing so. So for restaurants, startup expenses are huge, right? This is something I constantly have conversations with clients about, whether it's better to, how are we going to finance the equipment and the build out? And not just the actual contractors doing the build out, but also the time it's taking you, the time you're paying lawyers, the time it actually takes to get your liquor license approved, or I have someone who is trying to have a liquor moratorium lifted. That time frame, there's so much unknown in that. That can be part of your startup expenses. So we need to think about that. Brick and mortar build out, of course, even business expansion. So if you have one location and you're looking to expand, or I have some other clients who have a coffee cart, and according to their local health department, in order for them to have a second coffee cart, they must have a commercial kitchen. That is a big barrier going from one cart to basically a cafe and another cart. And not just is that a business expansion from a capital perspective, but it's a human cost because she'll have to add quite a bit of payroll to make all of that happen. Inconsistent revenue. If, January, February slows down for a lot of folks, for restaurants, trying to finance that period of time, again, can be challenging. Cash flow challenges. So when are vendors being paid? When is payroll due? When is rent due? All of that layered within the revenue spikes and dips. How do we manage that? If we're having issues managing our revenues combined with our expenses, that both of those things having volatility can be a challenge and can require us to find external capital. And then long sales cycles, I don't think this is as much of an issue for restaurants, but perhaps if you're contracting out and doing some big deals with lots of catering, maybe that's a challenge for you. But personal credit, again, does impact your business's ability to get capital. And the reason that is in this day and age, most loans do require a personal guarantee, meaning if the business is unable to fulfill its obligations, it cannot pay that loan back, you personally are still liable for paying that loan. An added layer of challenge here is that restaurants are objectively a high risk investment for a lender because of the rate of success after 3, even 5 years. It's challenging. There are a few industries like this. The other one that I put out there is actually childcare, which people probably don't think about that much. But childcare, home-based childcare, center childcare, they're both kind of risky areas. And so lenders, that may be a barrier you just need to anticipate existing and add that to your preparation for navigating, right? How are you going to speak to a banker about why you are a good investment? So let's talk about some of our key capital readiness topics here. So we have 5 C's of credit, cash flow, and financial toolkit. So the 5 C's of credit. The first is character. And character refers to the history, the established history you as an individual have in repaying your debts, right? So do you pay them on time? Do you not pay them on time? Do you pay them in full? Are you on a payment plan? In addition to that, for our purposes and many alternative lenders or community-based lenders, we also care about your participation and engagement in continued learning and education. So things like this for us with our internal 2 products, Dania heading up our Kiva program and myself leading our direct lending program, we really want to see the business owner's engagement in working not just in the business, but on the business. Next, we have capital. So they say you need money to make money, right? And going back to what I said about personal savings, oftentimes to get started, you're going to need capital. In addition, if you're looking for a larger loan, it may require a down payment, similar to a mortgage even. So if you're doing a traditional term loan, a bank may require 30% down. And they may also require what's called post-closing liquidity, which is a very fun term. And it means that you have cash available after closing. You can prove that. I have 10% of the loan amount available as cash after closing, just to show you have breathing room. For SBA approved lenders, one of the benefits of an SBA loan, which is always of interest to restaurant owners, is a lower down payment amount. So that capital amount may vary, but I would highly recommend doing research or working with us before you think you'll get a $300,000 loan with zero down. So that is one area where there's usually a big misconception, and thinking about it more like a mortgage and a down payment is kind of a helpful way to navigate the skin in the game you're going to have. So capacity, this refers to the business's ability to repay that loan every month. So I often work with clients and we'll go through and say, they may say, I need $100,000 solely for marketing purposes. And we go through what $100,000, I know this is quite the example, but we'll go through how much would a $100,000 loan cost every month. They quickly realize that they cannot afford that, and they don't need that loan amount anyway. So again and again, we'll work through what is the true loan amount, and does the business have the ability to repay that loan? A lender will want to see projections, not just income statement projections, meaning revenue projections, but cash flow projections. They want to see within revenues minus expenses that there is capacity every month to repay that loan. Next, collateral. This is always a good one. A lender will oftentimes, depending on the amount of the loan, require collateral. Collateral is an item of value, otherwise known as an asset, that is pledged to secure a loan, meaning that creditor now has their clause in that asset. You cannot sell that asset without them releasing their claw. They have the claw in it, right? It's theirs. They have a stake in it. And depending on the amount of the loan, the value of collateral may need to increase. So the larger the loan amount, potentially the larger the collateral amount. And not all collateral is equal. A house that you mortgage will have the mortgage lender as the first lien position, meaning they have first say because you have not fully paid off that mortgage. A lot of lenders are fine with second position on a lien for a piece of property. However, most lenders will not take a vehicle if you have a car note on it already. So beware, evaluate your collateral. If you have questions about this, definitely reach out to an expert and consider if someone else owns that collateral with you, owns that asset with you, they also need to be on board with the loan, on the loan. So consider that if you have a spouse, a child, another business partner, anything like that. And then conditions. Lastly, I just saw Bloomberg this morning. It's my habit to look at Bloomberg every day, that the inflation numbers from the last data set were hotter or higher than the market anticipated. And so now there's concern that the rate cuts to the prime interest rate, which drives most lending interest rates, it's usually prime plus something, that is in question now. There was a lot of anticipation that the back half of the year might see a 0.25% rate cut. We have not had a rate cut in, I think, years. And currently prime rate is 8.5%. So being aware, this comes back to when people come to me and say, I want a low interest rate loan. The conditions are not conducive to mostly low interest rate loans. SBA loans, which have a below market interest rate, are at 6.5%, almost 7%. And that's below interest market rate. So be aware of the conditions, understanding that the federal government or the Fed uses the interest rate to basically encourage or discourage spending. So in moments where our interest rate is high, the federal government is essentially discouraging lots of lending and borrowing and making the cost of capital more. So understanding where you're falling, understand you have no control over that, but we're living in this, we live in this atmosphere of constantly changing fiscal policy, and just know kind of where we are, right? Just take a look at Bloomberg every once in a while and see what's going on with the rate. And then keep an eye on your credit score as a whole. So we talked about the 5 C's. Now, one piece of homework, if you have not done this lately, take a look at your credit score. What is it? Many traditional lenders will look for 675, 680, and above. However, if you're like many business owners and you are below that threshold, do not fear. There are options, and there are very good options. That's where alternative lending steps in. So folks like us who are nonprofits, or folks like Allies for Community Business that are a community development financial institution, or even CDCs, which are community development corporations. They're non-depository institutions that lend to the community to try to get economic activity happening, and they do it kind of with a purpose. So Kiva as well is a non-traditional lender that doesn't do a hard pull on your credit. Direct lending, we don't have a hard credit limit either. Collateral coverage, I already chatted about that, so we'll move on. I want to leave a little bit of time for questions as well. So just a few cash flow tips here. So forecasting. Ideally, this is something you're working on at least monthly. So in terms of forecasting, again, it's not just revenue, it's also your expenses. Or if you are looking to roll out a business expansion, create multiple versions. This is a safe space for you to create different scenarios based on actions you may take. So status quo forecast, economic downturn forecast, expansion forecast. You can create a variety of these, and I encourage you to do so. Again, if you need help doing this, this is something we work with clients every day. Inventory. So keeping an eye, especially in food business where your inventory is perishable, making sure that you have a very tight grip on that. Tracking. So I asked our digital team for any recommendations, and I think Restaurant 365 was one option, of course, QuickBooks. So there are many software tools out there available for restaurants to do point of sales, reservations, inventory, payroll, all of those different pieces. And it's very important. If we want to make a data-based, data-driven decision, we have to have good data. And having a tool, software tool that captures each area of the business is critical for us to make an informed decision about which forecast, like we just talked about, which forecast do we think most likely? Which forecast do we want to move forward with? We have to have the information, right? So this is an area where outside investment, external capital, investing in your business is a great opportunity. So if you need help securing financing for getting that software in place, definitely pursue that. There are quite a few options out there. But again, professionalizing the business, ensuring that you have the software in place and know how to use it, that's going to be critical going forward. Payments, ensuring that if you get paid by customers, for the most part, I'm assuming most of you are business to consumer. That's not quite so much of an issue. I think it's more of a vendor payments challenge. And again, that goes back to ensuring that you have good cash flow. But many restaurants, I would say, work with larger distributors, larger vendors, and so you may not have much flexibility on when your bills are due. So keeping an eye on that, that's super important. And then pricing. I know there are more pricing tools, things to help you price out your recipe, help you scale your recipe and do so, and keep an eye on cost and especially on margin, right? This is where the hatchery and IRA are going to be super, super important in helping you understand. I was at the hatchery a couple weeks ago for a Empower Women's Month event, and I heard from restaurant owners who described how they create their menu, knowing that this is my really good margin item. And this one I make basically nothing on, but I have to have it on my menu because everybody wants it and I just have to have it. So understanding within your menu, you may not have a uniform margin on everything, but understanding what's necessary, what makes you a competitive restaurant that people want to go to, but also not lose sight of what is happening to your bottom line because of those decisions. Financial toolkit, I would recommend you go ahead and take a screenshot of this. This is our financial toolkit. So when it comes to spending some time to get ready for capital, these are things that you should have saved somewhere safe on your computer, have a digital version of all of these things, recently filed tax returns for the business with visible EIN. If you're a sole proprietor, your social is visible. Your bank statements for the business, your year-to-date income statement, and ensure that that income statement is clean. I have seen things on income statements that should not be there. I've seen expenses on balance sheets. If you need assistance in finding good bookkeeper, accountant, I'm sure IRA can give you some recommendations. We can give you some recommendations. Making sure your internal statements make sense is super important to a lender because we read those like a novel and we understand those. And if there are some just basic challenges in them, that's going to immediately cause a red flag. So we want to ensure that we pass that with flying colors, that nothing is out of place, ensure that those are in a good place. Cash flow projections, also Very, very important. Again, that's going to be your revenue and your expense forecast together every month for, 12 months, something like that. Make sure you're in good standing with the state of Illinois. You have current W-9, all your business licenses and insurance are up to date. You have a business plan and even have our owner's resume. Why are you qualified to run a successful restaurant? That's also important to be able to communicate that via your resume. And another one you'll want to take a screenshot of here, just updated this. This is our questions for a potential business banker. One question I ask new clients is, do you have a business bank? Oftentimes, yes. Should be a yes. And then I ask them, where do you bank? Why did you choose that bank? And 9 times out of 10, that is not a scientific number, but I would venture to guess it's very close. People say, well, I bank there personally, so I just did it. That is, I just want to enter the chat here to say that we need to approach, as business owners, approach a banker like you would an employee, a vendor, a partner. They are an important part of your business team, right? If we're picking them by default, we're giving up a very important strategic decision to just habit or convenience. Convenience is very important, right? So especially for someone in restaurants, having a lot of ATMs when you do deal with cash, yeah, that's important. But it might not be likely that that same lender or bank that has a million ATMs also has incredible programs for small businesses, women-owned businesses, minority-owned businesses. Those are going to be likely more local, regional, community-based lenders. So you may need more than one bank account. That may be a reality of something that you do want to consider. Of course, consider any bank fees. Discuss how are you going to work with me? What do you have to offer me, right? I'm a successful business owner. How are you going to help me with my growth? So as we wind down here, you do have options. There are amazing mission-based lenders who understand credit score is a barrier, collateral is a barrier, and want to assist folks. So Women's Business Development Center, Allies for Community Business. These are just a few examples of community-based lenders that have products available. And there are even folks like Huntington Bank, BMO Harris. There's a variety of other banks that have options. So do you want to talk about Kiva, Dania? Introduce us. We have the little lineup right here.
Sure, yeah. So I just want to take a few minutes just to highlight a few points about Kiva. So Kiva is one of the first personal micro lending websites. And since 2005, they have now upwards of 2 million lenders on the platform, lending now at $1 billion of capital to small businesses in over 77 different countries, which is really amazing. Another thing I would say about Kiva, it is, and it has become one of the first steps of the capital ladder for many small business owners to eventually, of course, be approved for traditional lending. But I think it also is a great way to prepare and be aware of what some of those things that Emma talked about that traditional lenders are looking for. as we talk about Kiva, even though it is a 0% interest, the capital is from $1,000 to $15,000, and the terms is about 12 to 36 months, given the amount of capital that you are approved for. Even with Kiva, though, there are still requirements and eligibility requirements that must be met as it pertains to personal and business. Of course, because it's non-traditional, it's not as stringent as traditional capital would be. But some of the things that they do look at, as Emma highlighted, which is very important, are debt to income, credit score, personal income. Are those personal assets and those business assets separate? Do you have a bank account for your personal and your business? And are those separate? As Kiva is non-traditional, it still very much so prepares you to understand what the overall capital picture looks like and what potential traditional lenders are looking for. And again, at the end, I'm sure if we have any questions or things, we can talk a little bit more in depth, but you can always reach out to me via email, phone call, if you have some additional questions, just to dig in deeper to see if Kiva is a great fit for you and your business. Thank you, Emma.
Yeah, thanks. And Dania brought up a great point, which I almost feel like I always fail to mention this. Commingling funds. Another reason that having a business bank account is super important, and something any lender will look for, is the business is over here, I'm over here. I'm not taking my business credit card and going to, well, Vinny's is a bad example. I used that yesterday for governments, but it doesn't really work as well for restaurants. I'm not going to Dick's Sporting Goods and buying my kids' soccer cleats with my business credit card, right? We're keeping things separate. That formality, that level, again, of professionalization of the business is important for lenders. Our other product, which I saw in the chat, someone asked, what are the products we have? So Kiva is one, and the other is direct lending program. So our direct loan is up to $50,000, 50. This is for established businesses 12 months and older. The interest rate is between 7 and 9%. We do not have a minimum credit score requirement. The business must be based in Illinois. And you do not have to be a woman. I will say that for Kiva and for direct lending, you do not have to be a woman-owned business to apply. And we do all sorts of industries. We certainly have a variety of restaurants, restaurant groups, bar/cafes. The only thing it can't be used for is, I guess it was more of a cafe than a bar. Anything primarily selling alcohol is likely not going to be eligible. But if you have a question about that, just make an appointment with us and we'll talk through it. So as we wind down here, so those are our two products. We'll leave time for questions, but I did want to plug, we have an awesome in-person event coming up. That is our Let's Chat Live for April. That is the 18th next week at the Exhibit House Chicago. We will be hearing from Sarah Brown, CEO for Brown & Associates Tax Services, about expenses, which I know is a huge topic for small business owners. I know it is after the tax date. However, I know many, many, many business owners do not do their taxes by April. They just file an extension because there's too many businesses for accountants to actually do all their taxes in 2 months, 3 months. So come hang out with us. It'll be an amazing event, a wonderful morning, inspiring morning. And again, you can book advising with us through the source. If you request access to capital, the QR code is here. With that, I'll stop sharing and we could just, Teresa, I think, is gonna help us with the questions.
Thank you so much, ladies. That was super informative. You guys are both great teachers. So let's jump into the questions. Lakeisha asked, is there a printable copy? So I'll send out this presentation in a PDF format and the recording after the webinar, so then you can, you'll be able to print it on your own there. Does WBDC partner with banks that are better for business?
We have a list, I would say. So the benefit of WBDC is we're advisors first, right? So whether you talk to Dania or myself, we'll sit you down and learn about your background, your business, and really what are the core challenges of your business. It may not always be that you need external capital. It may go back to cash flow management basics. If there's a capital need, then that's where we help you navigate the landscape. So we have a whole, big repertoire of banks, but for any one business, I'm never going to shove a giant list of banks at somebody and say, here are the banks. It's very tailored based on what you need, who you are, what the business is, and what we know of the products, services, even the individual bankers at that organization. We have those relationships. We want to be judicious with those relationships. And so it's a much more warm introduction. And we'll basically shop your deal around. So for example, I had a client who wanted an SBA loan. I shopped it around. Two of the three lenders I contacted me got back to me in 30 minutes telling me that they wanted to talk to this client about their deal. So we have a list, but I feel like boiling it down to a list doesn't do all the work we do justice. But there are certainly, we'd love to have one-on-one conversations with folks about what's the best bank for you, for your needs.
Great, thanks so much, Emma. So does WBDC offer educational classes to better prepare and further my knowledge on all things business related?
Dania, do you want to take this one?
I was going to say absolutely. When I saw that question in the chat, I think that's one thing that we do best here is being sure that we're providing as much resources and education to help our small business owners. So we do a slew of different webinars. There's cohorts that you can be a part of. Just as Emma plugged at the end, we have in-person events as well as webinars as we're doing now, just to better bring as much knowledge, as much support and networking as you're navigating that small business journey, that you don't feel alone. And again, we have just a wide variety of different departments of people of expertise and things so that you're able to feel supported in your journey, because a lot of times you don't know what you need until you need it. So having that one-stop shop here, I think is really important. And then even that one-on-one advising, in addition to all of those other things that you can be a part of, are really helpful so that you can dig into your own personal picture.
Yeah, love that.
And those are always available on our website. And we always update those monthly as individual departments as well as advisors. We do, plug and let our clients know what's going on, what's happening here.
Yeah. And we have our, what are we calling it? Like Capital Week.
Yes.
The last week of April, I have my monthly direct lending program info session where I do a whole in-depth hour about direct lending. And then Dania is going to roll out her Kiva webinar.
Absolutely. To kind of go deeper into what are the requirements for Kiva? What do you need? What does the application process look like? Just all of those questions that you can't kind of dig into in a forum like this, but really just kind of getting in the weeds and really just seeing what it looks like to be a Kiva borrower. So.
That's awesome. And what's the best way for, if someone wanted to get in contact with you personally, are you able to provide your email address, or what's the best way to contact someone at the WBDC?
Our email, we have phones, as well as our scheduling link is really helpful because that allows you to have access to our calendars to see, what times we have available. As I tell though my Kiva clients, still you can shoot me an email and say, hey Dania, looks like I looked at your calendar. This is what the next appointment, if I can get in sooner, do you have any available? Shooting an email sometime, because we do have those one-offs, so we have those allocated time slots for particular clients and particular needs. So we may be able to get you in sooner too. So I'm just letting us know that you're interested in meeting us is another great way too, in addition to using that scheduling link.
Perfect. I can include all of that information in the follow-up email that everyone will receive. So any attendees that want to reach out to Emma or Dania, that'll be included. I think that's it for questions. We are at the end of our time. I just want to say thank you, ladies, so much. It's been so informative. Thanks to everyone who attended. And like I said, the recording and the presentation, as well as contact information, will go out after this webinar. Thank you all so much. I learned a lot today too. So
Thank
have
you.
a great day, everyone. Thank you so
guys
much.
so much.
All right.
Take care.